Welcome to Branded. I'm chatting with Shruti Patel, who is Chief Product Officer for Business Banking at US Bank. And Shruti, in terms of we're here at FinTech Meetup, trends, a lot of the sessions are on trends. What trends to you stand out? What are the things that maybe don't get talked about enough right now in the world of finance and FinTech, and maybe the things that get overblown too?
Well, first of all, thank you for having me. As usual, FinTech Meetup is full of new trends, a lot of innovation, and a perfect place to meet a lot of really good companies. There are a few trends we're watching. I will not use the buzzword AI because everybody talks about it, but clearly AI is very top of mind.
And do you feel like I sometimes, just a question, is like sometimes I feel like it's like everyone has to say they're doing AI. It's like a box you have to check off. But then, also it's like, we operate in an industry where it's like know your customer. AI is sometimes more challenging to operate in the know your customer environment without a human check. So do you feel like people are like really committing to it, or is it just like, no, we're, forward looking, we have to be using AI already?
I'll speak from the context of the banks, and I think banks are really being very deliberate and strategic about it. So it is about know your customer and how do you deploy AI tools within a very regulated environment, and keeping in mind some of the pillars around AI like transparency, explainability, being fair, unbiased, and just ensuring that you're actually solving for a core customer need. So I don't think, specifically at US Bank, we are very mindful of what are some of the core pain points where we think AI tools can drive a lot of efficiency, whether it's internally for our bankers and our customer operations or externally for our customers.
Well, and how does US Bank use AI today? I mean, is one way trying to understand your customer better and see patterns in millions of customers that you don't otherwise see? Is that a primary use case, or how is US Bank using AI today?
There are a few examples where we are focused on, customer operations is one specific area where we want to make sure that anything we can do to offer frictionless customer service support to our customers, we want to be able to leverage AI, whether that is transcription of our calls, whether that's access to our knowledge base in a really condensed manner so that when an issue needs to be resolved, our ops center is able to resolve that issue really quickly. Some of the other things are personalized product recommendations. We are very mindful of offering the right products and services to our customers, whether that's in business banking or in our consumer franchise. And so think smart assistant, think personalized product recommendations, think ops service efficiencies. All of those are potential areas where we're looking. Another one, which often doesn't get talked about, but it's actually one of the biggest things which banks are focused on. And I think it's actually even a trend at FinTech Meetup is fraud. It's how do you think about fraud and AML and continuously enhancing the way you underwrite your customers, the way you're detecting fraud into whether those are your online banking capabilities or, money movement capabilities. I think AI could be a great example of deploying in that specific area.
Another theme that I sort of think of that I see here is not a theme unique to this year, but in the past few years, is just the role of sort of increasing access to customers like who might not have the perfect credit score. That's easy to do. But for others who don't, how you use new data sources, alternative ways of getting data. Maybe you're, linking to their bank account and you see, more cash flow analysis, other things like that. Where do you think that whole, trend is heading to sort of, because you're in charge of products, you create innovative products that sort of increase more access or increase access like at the right moment, at the right time, where someone's paying, I don't know, a late fee because they didn't quite get their paycheck yet. But if you could adjust that payment, maybe they wouldn't have that late fee. And that's a win for the customer and maybe a deeper customer relationship for the bank.
Yeah, that's a great question. We are investing a lot in what we call integrated experiences. Integrated experiences is all about how do we bring our banking products, our payment solutions, as well as all of the software banks are investing in specifically together to create a very frictionless experience. So We are very often in our online banking, in our mobile app, or even within our physical channels like the branch network. When a customer is opening up a deposits account, we want to offer them easy access to payments products, whether this is money movement capabilities as they're thinking about frictionless payments to their vendors or their employees, a simple bill payment, or they are in need of working capital. And so we want to actually surface within online banking through our integrated experience, through cash flow insights. Hey, look, you're running low on cash flow this month. How can we give you access to a micro or a macro loan within that experience? So over the last few years, we've invested a lot in building some of these embedded experiences within our online banking as well as within our physical channel, so that when a customer has some pain points, we're contextually serving them up the right products and offers without having them to actually proactively reach out to us in search of a product.
Well, and how do you think about innovation in terms of products? Like, is there a particular, product that you find particularly innovative or offer, or something that you're proud of, or maybe unique even for a large bank like US Bank?
I would say at US Bank, our most distinct value proposition is the way we bring our banking and payments value proposition together. We have a merchant acquiring business. And so specifically in small business banking, when a small business walks into the branch or is interfacing with our online digital capabilities, they're opening up a deposits account, but very quickly, we contextually want to ask them, are they looking for accepting payments or processing payments? We want to offer them our merchant network solutions, access to working capital. We have invested a lot, as I mentioned, in our integrated experiences. And so our hope and something we are very excited about is how do we bring that entire payments plus banking and software products together. Some of the things we're thinking about is embedded payroll, embedded bill payment, as well as account receivables. So while we are serving as custodians of their money and offering them robust money movement capabilities, we also want to give them software experiences such that they're not spending on all the standalone software tools in the marketplace.
Well, and how do you think of all of this, like, post-pandemic, in terms of, I'll give you one like adjacent field that isn't usually spoken about with fintech, but like, for instance, in like the grocery space, one of the things in the grocery space that is different was like after COVID, lots of people, like when, their Walgreens or their CVS, they couldn't get the COVID shot. They went to their supermarket, right? They went to their Safeway or Albertsons or Kroger's. And so those groceries, what caused them to do was think about, oh, maybe we're a wellness center. We would have never defined ourselves as a wellness center, but now we are one. Let's expand that. And you see post-COVID now a lot more services that you would typically only have seen at like a drugstore or a pharmacy. So is there anything that shifts like how you think about US Bank? We're a big bank. We play in lots of spaces, or is there a way that you think about things differently in sort of post-COVID or the area we're entering to, whatever the area is now we're entering into?
Yeah, I would say a few things changed post-COVID, right? Number one is definitely your digital experiences need to be really frictionless and seamless. And what I mean by that is, COVID forced a fair amount of digital interactions with your customers versus physical crunch.
And you even mean like sort of, you see this like consumerization of B2B, meaning like, yes, oh, it can't just be like simple, so easy to use for consumers. We want that for the business experience.
Exactly. Our small business customers are now just expecting us to meet the expectations of meeting them and solving for their core needs. And so, I'll say two things which came out very prominently post-COVID: workflow automation and cash flow management. Everybody is looking for more back office management, and they're actually relying on their banks to offer them more and more workflow advice as well as cash flow advice, because access to capital post-COVID became a very primary need. And it continues to be a primary need given the macro environment we're operating in, correct? We have seen inflation, which is a huge challenge we hear from our small businesses. Supply chain disruptions were a lot after COVID. And so access to cash flow tools became even more evident when we talk to our small business customers. Outside of obviously our digital tools and branch network, one of the bigger things we're doing, which is meeting the customers where they are. And so we work very closely with our communities in the footprints we operate in when small businesses are starting their business, for example, entrepreneurs. Where are entrepreneurs seeking advisory consulting services? We want to be in those places, in those forums. We have a business access advisor program, which is in the markets trying to meet these small businesses and offering them literacy around banking tools and financial literacy and access to underserved communities. And so to your question earlier, we're not just relying on our digital tools and physical channels. We now are going into the communities through our access program to make sure that as these businesses are getting formulated, we are there to give them some advice.
Well, and it's interesting because I think of the kind of offerings that maybe the sort of digital fintech are offering now that you would never thought they would offer, and how that impacts like a bank with a physical person. A good example would be like, let's say Stripe, which has Stripe Atlas, which is actually forming companies that they're offering now as a service. You wouldn't think, like, I don't know, sort of like a sort of simple way, developer-led way to transact payments would do that. But now you see this more like suite of services. Is there a way that U.S. Bank tries to leverage, the footprint becomes in some ways the digital shifted away from the physical footprint of locations, but that becomes a differentiator compared to sort of like maybe digital only or neobanks or others?
Absolutely. I'm sure you've read the headlines. All of the big banks are investing in bigger branch networks. And, a few years ago, everybody spoke about how the branch network was not really needed and the physical channel was becoming redundant. We actually have found quite the opposite. Customers do like a human interaction, and they're not really looking for these branches or our physical footprint as just pure transactional operational centers. They're looking for advisory services. And so they're not, they would like to walk into a branch and actually get advice on all of the financial tools we can offer them, which makes their life much easier. So I think we definitely invest in our physical footprint. We leverage them as our advisory centers to attract customers, to help them manage their businesses or their day-to-day lives more efficiently. And in the footprints which we don't operate in, we are investing heavily in our digital capabilities. So while we may not have physical centers, we want to make sure that at least our digital experiences are frictionless enough. We're also beginning to look at certain markets where we may not have a branch network, but how do we actually have physical bankers in those footprints so that we can continue to expand offering some of these services.
Well, and what about just, there's a lot in the news about, kind of a debate that has surfaced from really national politics is like sort of DEI, diversity, equity, and inclusion. And how does the bank think about what was never something that was controversial, now suddenly is? And this notion too of, there's a lot of potential bank customers out there that are from all sorts of ethnic backgrounds, cultural backgrounds. How do you sort of increase, reaching new markets, but also in this sort of very politicized climate where people can have strong reactions one way or other to this whole issue that used to be sort of table stakes?
So I will, we've had what we call the Business Access Advisor Program. Our Business Access Advisor Program is very focused on making sure we reach all communities and support entrepreneurship and small business customers, whether these are underserved communities, women-owned businesses, veteran-owned businesses. It's making sure that we are helping the right set of customers and entrepreneurs build wealth in the communities that they operate. We offer financial tools, we offer literacy education, we offer banking literacy programs, and most of all, we have an amazing small business access loan program. Our SBA program is actually number 4 in California. And we're one of the leading SBA providers in the country. And our small business access loans was really to promote small businesses and entrepreneurship, regardless of the communities they are coming from. It's making sure that they get the tools that they need to start a business.
Well, and to me, I think, it's sometimes like it's speaking in a language like I'm half Thai, I'm Asian, I come from that background, and I think sometimes in speaking to the community, it's like, what is a concept that maybe resonates when for me, it's like generational wealth, like the idea that you pass this down, like this is something that sets up. My mom would always tell me, like, your family for generations to come. This isn't even about you. This is about, and I feel like maybe certain groups, or if you've been like, either a minority group or an underrepresented minority, you sort of, certain things resonate with you that you respond to. And it's what I wonder is, we've politicized DEI so much that I wonder if it's just like, sometimes it's just like good business to understand a group, understand where they're coming from, speak in terms or language that resonates. And, it might be good business to do that, not just a box you either check or you don't.
Yeah, I would say, look, we look at our customers, right? We have 1.5 million small businesses in the country. The last time I checked, the US Chamber of Commerce data said we have about 34 million small businesses nationally. And most of those are micro small businesses, almost, I would say 75% are less than a million. And so where we want to focus, because these businesses are the backbone of the US economy, is making sure that we are focused on the customer and the business, regardless of the communities they come from, as long as we are able to meet their needs, serve up the right products and services. US Bank is going to make sure that they service these customers the right way.
Well, and how is the US Bank brand itself? Like, how do you think about that? I mean, it's, it has the country's name in it. It has, like, how does that factor in your marketing? Does it open up any other opportunities, or do you behave any differently because it's like literally the US is in the title? You are US Bank.
Look, we're a very strong brand. We're the number 5 bank from an assets perspective in the country. We have a very strong footprint in almost 26 states. We continue to look at how we expand our footprint and meet more and more customers across the country. Our brand awareness is very strong. Our product set is very diversified. We are one of 2 banks in the top 10 who actually has a very strong merchant acquiring franchise along with a banking product suite. And our digital capabilities are actually much above market parity. I think we're the number 1 mobile app in certain studies. And so, as I mentioned, we fully leverage the power of our brand name or no name, and we obviously leverage the footprint very strongly.
Well, and do you find, I mean, with small businesses, I mean, I think that one of the things that's interesting about the segments is that, small business owners, I mean, they're consumers too, right? So how do you think about the overlap between someone who might, I don't know, enter the bank or engage with the bank for a consumer product, but they happen to be a business owner? Is there overlap? Do you work with your counterparts in sort of like other sort of sectors and divisions? How do you sort of think about the consumer small business connection?
Oh, 100%. There's always overlap, right? If you think about small businesses, there are a fair number of small businesses who essentially are services industry. They could be sole props, architects, interior designers, dog walkers. We consider even that as a small business industry. We are constantly looking at our customer set, whether within the consumer franchise or the business banking franchise, to see what are the best products which is helping them solve the needs, whether it's card products, lending products, or even as something simple as an operating account. Is a business bank operating account with all of the capabilities around money movement and bill pay and accounts receivables actually much better for a sole prop, so that they can easily create an invoice and get paid, versus actually being a consumer franchise customer? So we make sure that we're constantly looking at the set and marketing them with the right product.
And what are your most important marketing channels that you consider? And then what are your, I guess, maybe aspirational channels that you don't do a lot of yet, but maybe 3 years from now you'd like to be doing more of?
Look, I think from a brand awareness perspective, all of the traditional channels are where we are. So think social. We have expanded our social reach to ensure we are reaching the right audience. Social is also super important, as all banking institutions, they want to capture the next gen of the demographic, which is evolving. I often joke that, the current population interacts much more with social media than any other generation before them. And so, um, outside of the traditional direct mail and email marketing and, being in the right forums and leveraging social media, we're constantly looking at some of the other channels. And I think one of those is really, I'll take the example of business banking. Small businesses, they interface with a lot of different, I would say, counterparts as they're thinking about their businesses. They are going to education centers where they can get access to working capital loans. They are going to marketing forums where they're learning how to market their business more efficiently. They are taking tech education courses so that they can build a pretty website and work with agency partners. And so I think those are the channels we aspire to be in. I don't think we have done effective marketing in reaching the small business audience in some of those forums. I think we still rely a fair bit in terms of brand awareness on social and email and direct mail marketing.
And given that we're at a finance fintech conference, what do you think like people in our industry like miss out on or forget about that you think would be wise to pay attention to? What do you think the industry just needs to focus on a bit more than it has?
I would say two things. I think for banking, I think people often forget the banking ecosystem is very regulated. It's highly regulated. It has a lot of compliance requirements, and so as custodians of money, and as custodians of moving trillions of dollars in money movement capabilities and operating in a very regulated industry, I think people often forget the complexities which come with protecting customer data, protecting confidentiality, but also building safeguards so that a payment doesn't fail. It would be frustrating for a small business when they've initiated a bill pay within our capability and the payment fails and the vendor does not get paid and they don't receive their inventory, or they are trying to pay an employee and we have not actually gotten the employee the payment in the right time. So I think people sometimes forget how robust these money movement capabilities and software experiences need to be. I think
Well, and also I hope, when I perhaps hear or talk about instances where something fails, like to me, this is like an opportunity to sort of like potentially delight the customer, right? Like if you could actually come in at the right moment, something failed or something was unforeseen, and then actually have a solution that's how you get delighted, loyal customers who, regardless of whether, I don't know, the interest rate is slightly higher or lower at a bank, stay with you because, all of those sort of unhappy customer journeys that become happy build loyalty.
Well, and that's where I think fintechs and partnerships with fintechs come in, because I think that's where banks can really leverage some great customer experiences in partnership with fintechs who are meeting some of the customer needs. There's speed to market. There is obviously seamless customer experience, which fintechs have built. But the one thing which fintechs have done is that they have singularly focused on some core jobs to be done and how can they be done efficiently, and built really great experiences around it. And I think banks can really leverage that, to your point, which is delight the customer when something fails by leveraging partnership with a potential fintech.
Well, and how do you evaluate fintechs? If you're a fintech at this conference, wants to work with U.S. Bank, they're hoping to there's a bunch of meeting tables over there, hoping to sit down with you and have some quality time there, Shruti. But how do you evaluate it? Like, what would they be wise to do? Like, at what point of the journey should they be talking to a U.S. bank? Meaning, do they need to go talk to community banks and regional banks and have some positive referrals before they come to you? No. Do you want to hear about them first? Because, if they have something game changing, you want that for US Bank first. Like, should they call you? Should they email you? What are you saying here?
I would say a few things. I think that where we have struck partnerships in the past with potential fintechs, what we have been really wowed by is the product and the pain point they are solving. We are very acutely aware of the things we need to do for our customers and build great experiences. So if a fintech is actually solved one of those pain points, we are very much interested in hearing them out. We would want their product to be scaled. So I would offer some advice to our fintech partners. We like scale. We like tried and tested, at least in a small customer set, to know that actually it is solving a core pain point. Actually, we are feeling optimistic about the feedback we're receiving from the market once that has been deployed. And a few things are really important. If you're partnering with banks, having a robust set of APIs so that banks can actually build embedded experiences around that is important. And then last but not the least, we want our fintech partners to care about customer data. Very often we find that they are not aware of the complexity of protecting customer data and all of the things around privacy, which comes when operating with a bank partner.
This is sure. And almost like all of those people become extensions of the bank itself. And you sort of take them on because of how the industry is regulated as part of the bank that you're now responsible for. With a partner, you're now responsible for what the partner does too as well.
Sure. Exactly. Because to the customer, it is a US bank product. And so US Bank is really the entity responsible for all things data, experience, product, and end-to-end.
Along your professional journey, just to maybe end on a couple thoughts, what has been, I'm going to ask this negatively first. What is the worst advice you've received? Have you received some bad advice along the way? I mean, you're a senior person at a major bank. What have people advised you, mentors, colleagues, and others? Is there ever horrible advice you've received?
I don't think I've ever received horrible advice. And if I did, I probably filtered it. But I will say that, I've spent a lot of time, obviously, in banks, a little bit in fintech, or large tech, rather. And I think it's really important when you're building products to constantly remember that you're actually building a product which is addressing a need. I still find a fair number of times, and I'm not saying I think all companies are guilty of this, that sometimes we think, let's build it, they will come. I almost have never seen that happen successfully. And so I would say the advice is, specifically if you are in a product role, constantly think about the customer you are solving for.
Well, and what fintechs are you excited about these days? Are there ones, I mean, you can name names if you'd like, but I also just mean categories. Where do you think there's like room for innovation? Where do you think there's like, ooh, like that's, there's some buzz being created, or there should be? Where should people pay attention?
There are a few, jobs to be done, which we are very excited about because we're seeing a lot of momentum in those trends. I would say fraud and all things underwriting. It's not a new trend. It's been around for a long time, but we're finally seeing some really good momentum from a few fintechs who are actually helping large institutions tackle all things fraud. And, if you just look at the fraud patterns, they are becoming more and more sophisticated. We are no longer operating in a traditional environment anymore where there's just account takeover. I would say account takeover, in fact, is the least of anybody's worries. We are in some really sophisticated fraud environment. And so any company out there which is solving for that is really important. We don't talk about this very often, and I don't know whether we're still talking about it, but merchant of record solutions are actually really on trend. Helping small businesses sell globally, focus on cross-border commerce, whether this is duties or tax or really helping them reach global footprint very seamlessly, I think is a very, very powerful feature right now. And, you'll hear some really large tech companies actually invest a lot in merchant of record. They are making some headlines out there. And I think the last but not the least is just contextually serving up working capital. I think we still find a few out-of-the-box lenders who operate in the marketplace today, and then banking institutions continue to be the traditional institutions for lending products. I do think there's something to be done there in terms of giving access to working capital much more contextually and real time.
Sure. And what do you take with you? I'm going to adjust this quick. Just we can get one good here. Just hold this like this, and that way you'll have it there, so we can get one good shot here. We're just wrapping up. So what do you take with you? I mean, in your career, you've been at Shopify. Oh, and some of that. You've been at Shopify. You've been at American Express. What do you take from those experiences in particular that you utilize now at US Bank?
I think being customer centric, all of those companies which you named have really been very customer obsessed. They build great customer experiences, depending on the needs they're solving for, whether this is building great card experiences and dining and leisure, to helping small businesses start their businesses really efficiently, to making sure you have robust money movement capabilities as a large bank, and enabling global payments. And so I think customer centricity and being customer obsessed is sort of, I would say, the best advice.
And finally, final question. What do you think, if we come back and record another podcast at FinTech 2030, what do you think we're going to be talking about then? Where is all this headed? Where do you think this, by the end of the decade, next 5 years, this resolves and it will be on trend for them?
That's a really hard question because
I end on the hard ones. I end on the tough ones. That's 60 minutes style. There it is. No, yeah.
Because we move so fast. I think a few things. I think it'll be 5 years from now, 2030. I think it'll be telling to see what kind of AI tools have really been deployed and successful. How successful we have been across all industries, including banking, in terms of Gen AI success. And then all things stablecoin, which is making a big comeback again. You just saw the OCC headline yesterday that they are lifting all restrictions on banks when it comes to stablecoins, cryptocurrency, and investments in that. I am looking forward to what that means.
Okay, well, thank you for joining us on Branded. It'll be an interesting 5 years. FinTech has its ups and downs. There's some challenges in a few years, but now I think outlook is cautious but positive, and we'll see what's next. So thank you so much for joining us on Branded.
Thank you for having me. It was a pleasure.
Thank you.